As our guest just mentioned, China is dealing with its own economic slowdown as fires get worse in Europe. But as a series of policy announcements recently made indicate, the Chinese government is bringing out all the big guns to show up growth in the world's second largest economy. Ying Hang reports from Beijing.
China, the world's second largest economy and the engine of global growth, is facing headwind from outside, slower than expected economic growth in the first quarter of 2012.
Clearly, China's economy has been slowing down over the last couple of years, and our projection for this year is 8.2%. The first quarter numbers were a bit lower, and the most recent numbers show some slowdown.
In the last several months, we're seeing China's export growth dropping to single digits, and actually Chinese exports to Europe have begun to drop to negative territory.
To make matters worse, Europe is the single largest market for Chinese exports, accounting for more than 22% of the country's total outbound shipments last year. With the European debt crisis continuing to bite onto demand, experts said manufacturing and exports can no longer propel Chinese economic growth and by extension prop up the global recovery. But it's not about regaining the heady GDP growth of the past decade. Analysts say China should ward against an excessive slowdown.
Moderate slowing down is actually desirable for the long-term restructuring of the economy. However, too quick a slowdown would be damaging for the whole economy.
And from reliance on exports to a renewed focus on domestic consumption, from prudent monetary policy to gradually easing monetary policy, and this, a flurry of stimulus policies, the likes of taxi cards, physical support and subsidies on energy-efficient products, China's policymakers are moving actively to shore up growth.
So there will be continuously huge number of policies, and these, I would argue, are not the same as the policies in 4 years ago.
In the first several months, I would say the government put more focus on the economic restructuring, and now it's more balanced and probably shift towards the growth concern. So policy easing is happening, and we expect that fiscal policy will play an active role. So that means investment body by government, and also tax cuts, consumption stimulus policy. And on the monetary policy side, we expect more RR cut and more interest rate cut. So that will help the China economy to come back in the second half.
China's economic growth is expected to accelerate in the third quarter of this year as effects of the government easing policies become evident in July. It will allow China to remain a powerful engine for the global recovery. Ying Hang, CCTV, Beijing.